How's it going, everyone? My name is Darius,
And I'm Carmen.
and we're the founders of Wealth Nation. This channel is dedicated to showing you how to own your own lifestyle through a concept called infinite banking. Make sure you subscribe to our YouTube channel and hit the notification bell so that you can be notified every single time we come out with brand new videos. Now, the reason for this topic today is we've been getting a ton of questions on how in the world can you earn 4% interest and pay 5% interest and still make money. So this question is dedicated to you.
Yeah, we want to make sure that you understand infinite banking, as you guys can probably see from the rest of our videos. We want to make sure that we break everything down to a digestible fashion. So I'm actually going to turn my computer on and walk you through how you can make money while you're earning less interest than you're paying out. So we're talking about 4% compound interest versus the 5% simple interest that you pay to the insurance company when you get a loan. So hang tight. All right, ladies and gentlemen, for those of you who have seen our beginner's presentation, this is the exact same information that I'm going to cover, where we talk about how you can make money when you are earning less interest than you pay out. And I'm going to use these three calculators to walk you through exactly what I mean by that. So in the bottom calculator, let's just pretend that this is your savings account and you have $30,000 in that savings account and you're earning 4% interest. Now, I know no bank is paying 4% interest, but follow along for me for this example. Now, what are you going to do with this money? You're saving money, so obviously you want to use it for something. Let's just pretend for this example, you want to buy a car. And the reason why I talk about cars is just because the majority of Americans own cars. We've all been through this painful transaction. And what I mean by that is, are we financing the car or are we going to pay cash for it? And in this case, you are determined to pay cash. And it just so happened that $30,000 was your goal because you have been researching the vehicle that you want, and it just happens to cost $30,000. Now, at this point, you come rushing over to the bank, and I am your banker, and you say, "Hey, Carmen, I'd like to withdraw $30,000 out of my savings account because I want to purchase a car today." And I'll say, "You know what? Congratulations. Saving money shows that you have discipline, and I'm so excited for you to purchase your car. However, before I give you this money out of your savings account, I want to offer you a better deal. What this deal entails is you getting a loan from the bank for $30,000 at 6% for 60 months. And the reason why I'm telling you to get a loan from us instead is because I don't want you to spend your money and lose you being able to earn 4% interest. So instead, keep your savings account intact. Don't take any money from it. Continue to earn that 4%, and let me give you a loan for 6%. All I'm going to do is collateralize your savings account because in the event that you default, we'll take your savings account. But because you kept it intact, that doesn't disrupt the growth at all. So just utilize my money, OPM, other people's money, to finance this car. And you know what? That's not it. Not only are you using someone else's money for this purchase, you are actually going to earn more money at 4% than what you're paying the bank back at 6%. Do you believe me when I say this? Do you want to take this deal, or would you rather pay cash for the car? When Darius and I first heard this example, we thought that the banker was telling a lie. And the reason being is because we were looking at this going, "Wait, if I'm earning 4% and I'm paying out 6%, how in the world can I be earning more money?" Because when I look at this very quickly, I'm thinking I'm losing 2% somewhere because I'm paying 6 and I'm earning 4. So how can I make money from this transaction? But let's pretend that you believe me as your banker and you think I'm looking out for your best interest, and let's see what happens. So you do the deal. $30,000 at 6% for 60 months, you will end up paying the bank $579.98 every month. When we calculate that, $579.98 over 60 months, you end up paying $34,799. What I mean by this is you're paying $47.99 in interest. And this is over the course of the term. So after 5 years or that 60 months, this is what you would have paid out to the bank. But remember, I told you you're going to have more money in your savings account than what you paid the bank. Let's figure if that's true. $30,000 earning 4% interest over 60 months. That amounts to $36,630. So I was telling the truth. But how in the world is this possible? This blew my mind when I first saw this because I know, like I said before, I was looking at this thinking I'm losing 2%, but I'm winning in this instance. Not only have I used someone else's money to pay for this car, I still have $36,000 in my bank account and I'm still driving the car. Hashtag winning. Is anybody feeling me at this point? I was blown away when I saw this. Now, do you know how this happens? Let's take a look at this loan calculation in the top right calculator, the 579.98 over 60 months. Do you realize that every single time you make a payment on your loan, that is considered a decreasing balance? Every single time you make a payment towards that principal and interest, the principal is going down and down and down every single month. So the characteristic of a loan is it's a decreasing balance. However, what is your savings account doing? You're earning 4%. And what I neglected to share with you is this is a guaranteed 4% compound interest. You are earning money. That $30,000 balance is getting greater and greater due to the compound interest. And that's why you are able to earn more money at a lower interest rate than what you pay and still make money. When you take a look at this, this is super powerful to understand because you are able to make money when you earn less interest than you pay. I'm showing you this on my screen. It is very possible to do this. This even works at a different interest rate. Let's say it's 4% and you're paying 8%. You're still coming out on top. But the problem, what happens is as consumers, we never take the time to do the math. And we are intimidated by the interest rates or the percentage rates because all we do is rely on the monthly payment. We're looking at what can we afford and thinking, oh, this is a good interest rate or this is too high. But we don't take the time to do the math and actually calculate how much interest we're paying out. So in this example, we want to make sure that you understand how these numbers work because we are going to do exactly this scenario within our whole life insurance policies to get ahead. Let me change these icons out for you. Hopefully this makes more sense. In this case, the $30,000 in your savings account is going to be the $30,000 of cash value that you have in your life insurance policy. Now, the cash value accumulation is going to be different from person to person, but just to use these same numbers so you understand what I'm coming from, let's say that you have $30,000 of cash value in your policy. Instead of taking a withdrawal out of your policy, you're going to get a loan and you're going to get a loan from the insurance company. So the insurance company is now going to lend you the $30,000 that you need to finance your car. And the insurance companies, I was actually being conservative with this example. The insurance companies charge you a 5% simple interest fee for the loan. So in this case, you were having to pay $34,799. Do you know how much 5% simple interest is on a $30,000 loan? That's $1,500. You have a loan for $30,000 and on your anniversary, they are going to charge you $1,500. And you choose at that point, are you going to pay back the loan in full or are you just going to pay them the $1,500 and call it good? You have the option, you have the freedom because your policy is what is collateralized. And since your policy is collateralized, it doesn't disrupt the growth. It keeps on going and going and going because you're not using your own money to finance your lifestyle. And this is how we utilize infinite banking. You are earning the guaranteed 4% interest. Before, remember, I said follow along with me with the story. But the reason why we use 4% is because that is what our insurance companies, the companies that Darius and I work with, are paying out. guaranteed 4% compound interest, and they're charging 5% simple interest on the loans, which is huge because what does this mean for you? That's even more money that you're able to hold on to for yourself, more interest that you're able to gain in terms of this whole process, and just more items that you're able to finance because you're not bogged down with such high interest rates and such high interest that is being paid out to someone else. All of this comes back to you and is paid back to you within your banking system as long as you know how to work the system. So, again, when we talk about being able to make money when you are earning a lower interest rate than you pay, this is demonstrated right here on your screen. You are earning a guaranteed 4% compounded interest rate. In this example, you paid out 6% for a car loan. However, you still ended up with more money in the end with $36,000, and you're still driving your car.
I hope this video answers your question on how you can make money earning less interest than you pay. Now, if you still have questions about the topic, make sure you look below and get our contact information and send us an email or comment directly on this video, because we want to make sure you understand exactly how infinite banking works and how you can best utilize it for yourself.
Yeah, so true. I mean, once you grasp this concept, the sky is the limit, and it just becomes amazing and super transformative as far as what you can do with your finances once you understand how infinite banking works. And understanding this one principle here is what's going to change everything for you, because from a society standpoint, we're not taught how this works. And so once you break the code, so to speak, for this one simple transaction, it changes everything, like we said. So thank you all for watching. Be sure to subscribe to our YouTube channel and also follow us on Facebook and Instagram at wealthnation.io.
Remember to own your own lifestyle,
or someone else will.